In this video, we're diving into what I think is one of the most powerful supply and demand indicators out there. I wish I had this back when I started trading. It would have made understanding market structure so much easier. But before I show you exactly how this indicator works and why it's so effective, let's quickly go over what supply and demand actually means in trading market. Check this out. Supply zones are where the big sellers step in. It's where price usually hits resistance and drop because large institutions are unloading positions. Think of it as a wholesale zone for the market. Prices are high, so sellers jump in. Demand zones are the opposite. That's where big buyers enter. Price often bounce from these areas because smart money wants to buy cheap, creating strong support zones. In simple terms, when demand outweighs supply, price moves up, and when supply dominates, price moves down. The real edge comes from knowing where these zones are forming, and that's exactly what this indicator helps you visualize in real time. Stick around because in a second I'll break down how to use this tool step by step and why it's become my go-to for price action and market structure trading. There is a brand new indicator called Flux Charts MTF Supply and Demand Zones indicator. It's one of the cleanest tools I've seen for visualizing market zones. Before I show you exactly how to add it, let's first break down what it actually does and why it's such a game changer. Here's the deal. This indicator automatically maps out supply and demand zones based on momentum candles, meaning it's reading pure price action, not some lagging oscillators. What's really powerful is that it can detect zones across up to 3 different time frames at once. Plus, it combines overlapping zones and even marks retests and break signals, so you can instantly see whether price is respecting or breaking key levels. Let's look at this example on Bitcoin 15-minute chart. You can see a clear demand zone forming, right? Then boom, a retest signal pops up the moment price taps back into the zone. And what happens next? Price quickly rallies straight up. But here's the cool part. A little later, price comes back down again, retesting the same zone, and the indicator fires up another retest alert, showing you a potential buy setup once again. It doesn't stop there. Jump over to the 1 hour time frame. Now we've got a supply zone forming. The indicator marks it clearly, showing sellers stepping in. But watch this. Right after a bullish breakout through the zone, the tool instantly triggers a breakout signal, flagging another potential buying opportunity as price flips that zone from supply into demand. Now let's talk about something that confuses a lot of traders. When you're looking at these charts and you see both retest and break signals, which one should you actually take? Seriously, should you buy when you see the retest alert or wait for the break signal to confirm momentum? What's the actual logic behind the decision? Don't rush it. We'll break it down step by step. Just stay patient for a few seconds because before we answer that, we need to bring in one more key pieces of the setup, an indicator called MA Ribbon R2. This one made by just Uncle L. It's basically a clean, multi-moving average ribbon that helps you visualize trend direction and momentum strength at a glance. To actually make this MA Ribbon R2 indicator useful, we need to tweak just one simple setting. By default, it's set to your current time frame, but makes it way too sensitive. It reacts to every little wiggle in price. Here's the fix. Set the indicator to a higher time frame. This single adjustment filters around 80% of market noise. So for example, if you're trading on the 15-minute chart, switch the MA ribbon to the 60 minutes time frame. That's why you'll see the true trend directions so much more clearly, no more getting faked out by random fluctuations. And here's why this matters in trading, whether it's US stocks, forex, crypto, or any other financial market. One of the most powerful principles is simple: always trade in the direction of the overall trend. That's where the MA ribbon helps big time. It uses a colored ribbon to show the trend bias visually. So, whenever your candles are above the ribbon and the ribbon itself turns green, that usually signals an uptrend. Buyers are in control. On the flip side, if the price is below the ribbon and it turns red, that's a high probability downtrend, meaning sellers are dominating. Back to the big question: when you should use retest signals and when you should use break signals. The answer is actually pretty simple. You only take ones that line up with the market trend. Let me show you exactly what I mean. Check this out. The MA ribbon is glowing green and the price candles are clearly above it. That tells us the overall trend is up. Now, if you look at closely, there are few retest signals popping up from a supply zone. But since we're in an uptrend, those signals go against the main direction of the market. They don't make sense here. So just skip him. But right after, notice what happens. The indicator prints a breakout signal, the little B alert, just under the breakout candle as price breaks above the supply zone. That's a great potential buy setup because it's fully aligned with the uptrend. Quick side note, let's talk risk management because that's just as important as the entry. First, never risk more than 1% of your total capital per trade. For your stop loss, use the most recent of the market. And for your take profit, aim for at least 1 to 1.5 risk to reward ratio. Alright, back to the example. A bit later, we've got another demand zone forming. Price comes down, retest it. And this time, those retest signals are pointing in the same direction as the trend. Perfect. That's a valid buy signal backed by the market structure and momentum. Now flip it. In the next example, the trend is clearly down. Red ribbon priced below it, you see a few retest signals of a demand zone. But remember, we're in a downtrend. Those buy setups, skip them. They're fighting the flow. Instead, look for the breakout signals below those same demand zones. That's where you'll often find high probability sell setups in line with the trend. And hey, if you want to try the Flux Charts MTF supply and demand indicator yourself, there's a link down below in this video and there's a 15% discount when you grab it from there. Happy trading!